Hey traders, this is Ron. Happy Thursday. Hope you guys are having a great day. As always, everything in this presentation is for educational purposes only. All right, we'll kick off here with a daily chart of the S&P 500 ETF. The spider is using TradeStation. Fresh new all-time highs, about 1% today, above average volume. This time it was on news of a trade deal being reached, etc. Just keep in mind that the news agencies and so forth, they just keep saying that the market is moving to every single thing that seems to happen according to them. Regardless of what news caused it to go higher, we went higher. The bulls are in control. Today there was news about tariff stuff. Yesterday there was news about the Fed. What percentage of each one of those is helpful? No one knows. The market went up. New highs, above average volume, bulls get the edge. It's really that simple and straightforward. Again, keep an eye on the red line, the 20-day EMA. As a short-term trailing stop, we get below that. That is the cautionary period, just like here. It lasted for a whole day. Bulls got the edge immediately, and then up we go. If we get below the orange line, which is the 50-day institutional moving average, 50-day SMA, that is where trouble starts for the bulls. Take a look at the Dow. Up 1%, fresh new all-time highs by a few pennies. Intraday completely blew away new highs, but we did close at new highs as well. We take a look at the Qs, QQQ, up almost 1%, new all-time closing highs. And take a look actually at IWM, Indigo Whiskey Mike. If I zoom out here, look what they finally have done. Again, another nice little surge. We've broken above these highs. We came back, we tested it here, just like I was saying. That's not a bad thing. And actually, if I zoom in here, we even held the red line. We got below it intraday, but we closed above it. It was still showing strength, and today we just blew through the previous highs. Now up here, 171 up towards 173 is the target. I had a question on bonds with the news of the Fed, etc. Bonds are still in a downtrend. And if I come in here and let's do a drawing, do a trend line from here to here, you sort of get the idea. Over here, we'll do a trend line. It's not perfect, but you get the visual idea of what's going on. We still can't set a higher high. Even if I zoom in here close, we got stuck at this high and then we roll over. So bonds are still bearish. The target now is going to be back at the previous swing low at 135 and then back down here towards 130. There was news on Apple today and they were talking about slashing, I guess, or there was a 35% drop in expected orders or something from China. And oh my God, this is going to be bad for Apple stock. And it still finished up about 0.5% on the day, closing it fresh, new, you guessed it, all-time highs. Just like Apple, it makes for great theater to put out bad press on Apple, whether it's true or not. It doesn't matter if it, in a way, even if it is true, let's just say that there is a downward tick in China. That's not its only business. And they make it sound like that's the only place the stock can grow. And Apple's just so much more than an iPhone company. It's media, it's so much other things. And what is the big money doing? Was the big money selling? Were they buying into the comic performances on the news networks? Nope. The stock went higher. Where is Apple going to get in trouble? As soon as it gets below the red line on a closing basis, first warning something could be up. But just like the major indexes, a one-day blip, but we even closed the highs of the day, and then we get right back up. So lose the red line, first sign of trouble. You lose the orange line, bigger sign of trouble. And that's when more caution comes in. So Apple here is still looking bullish. Just remember, negative headlines gets lots of clicks, lots of eyeballs, and they get to sell their advertising, which is how they make their money. Here is AMRX. Keep an eye on this one. I'm not a huge pharmaceutical biotech type trader, but the volume today was epic. Average volume about 2.6 million shares. Today it was 20 times that at 48 million. In doing so, it cleared this high and this high, but once it even, at 504, that's enough to even break this right here. Now the target would be about 660, 670. That's 20+% higher. And then you take out this little area here, ballpark 730, 750, then you start talking about other gap fills. So from a reward to risk perspective, potentially huge upside targets. Where would a potential stop be? Given that we've gapped all the way up here already, I could use the intraday low from today's candle. I would not want to get below that because that could lead to a gap fill. So again, always for paper trading, educational purposes only. How about casino stocks? WYNN. WYNN was up almost 10% today. Watch what happens if I go to a weekly chart of WYNN. Today's big move cleared the previous high. It's also breaking this downtrending line from here to here. Immediately the target's 140, then 150, then back up here. How about Las Vegas Sands? The stock really jumped today, almost 5%. We have cleared barely this previous high. Its target now is up there near 80. That's maybe 11, 12 bucks higher. DXCM, had a question on this one. This is DXCM. This is a weekly chart. Let's go daily. Now you can see it. So DXCM had a huge move below 160 all the way up to 230. The first sign of trouble, and this goes, I think, for any stock, whether it's Apple, whether it's an ETF, DXCM, a precious metal, when you have big explosions or big runs, and then there's selling pressure, selling isn't a bad thing. It can re-energize the bullish trend. But how do you know that the tide is turning, the sentiment is shifting? A rise in volume is one thing. We are starting to see a little bit of that. Let me zoom in a little closer. We're getting above the average volume line right here. But the real key for me was yesterday when it got below the red line on a closing basis. Now, we didn't have a big bar like we had today, but below the 20-day, slightly above average volume, that was the sign there's trouble. So when we look to the S&P or Apple, same thing. We're going to look for a close below the red line. And if volume is rising, big warning sign. If the stock finishes near the lows of the day, even bigger warning sign. So we had the down close below the red line, and look what happened today. Loses almost 10 bucks, almost 5%. At this point, all the way down to where the gap up occurred, about 185-ish would be the target. That also coincides with the 50-day moving average. So almost 10% lower on DXCM. And keep in mind, tomorrow is the day. Top 10 stocks for year end in the new year. We're going to talk about a stock that's 7 for 7. Last 7 years, it's won every single year. Many of those were triple-digit wins using options. And I'm going to show you, I'm going to back test it and prove it to you, all with real data. Also, we're going to talk about stocks that typically explode higher once the new year comes. You need to know this hot list. This is what I think makes a difference between a so-so year or an amazing year. And the best of it all, it's just data, and the proof's going to be in the pudding, as they say. So we had 500 seats to start. We're now down to under 70. So register at the bottom of this video. If you're receiving this video by email, there's going to be a link in there. Be sure to grab it. We're going to kick off right at the top of the hour. Within the first 5 minutes, I will promise to show you the hottest stocks for the new year. These stocks rise as much as, or I should say have risen, as much as 75, 85, 90+% of the time. It's incredible. I'm going to share that with you tomorrow, Friday, December 13th, noon Eastern. Again, happy holidays to you and your families. Look forward to seeing you tomorrow, and all the best. Take good care.